moving on to number two, focus on the best stocks and the best setups. I think there's a feeling, especially with newer traders or investors, that you have to be active all the time, right? You have to be trading. You're a trader. That's your job. But in reality, what you want to do is, I'll call it trade like a lion. You want to be very lazy and just be sitting back and waiting for the right opportunity, and only actually being active when the overall market conditions are right, the industry groups and sectors are setting up nicely, and the individual stocks themselves are golden opportunities. They're game-changing companies, and their charts are perfectly aligned for how you'd like to trade. Until that happens, you're just kind of forcing, C- setups, and often that's going to get you C- results. In the market, we have the kind of luxury to wait and wait and wait, and then pounce exactly when the iron is hot. I like to use a baseball analogy. I know you guys most likely like cricket, but basically in baseball, you can wait for as many pitches as you want until one comes right to that sweet spot, and that's when you want to take the swing. So I think that's really important, and focusing on the best and best stocks and setups, that's going to help your performance immensely, and try to limit, those needless losses in those, not so good setups. Number three, I think is really important as well. And I kind of touched on this, a while back. You want to establish trading rules for your process. And this includes buy rules, sell rules, how large are your positions going to be? When are you going to do post analysis? How are you going to assess the market conditions? You have to kind of answer all those different questions. And basically what you should aim to achieve with these trading rules is they should be precise enough that another trader of a similar ability should be able to follow them and pretty much do your routines, do your process, and come up with, similar, if not the same setups or ideas to trade. So basically think about all the questions that you have when it comes to trading. How am I selecting stocks? What does my setup look like? How do I manage risk? That's a huge one. And we'll touch on that in just a second. As I mentioned, what's my position size going to be? You want to define all these things so your actions are very repeatable. They're following a rule set. You don't want to be random in the markets. That's where things kind of come back and hurt you. You want to have that process, and maybe this rule ends up not being the right rule for you, and later on you realize that and you make a quick change or an edit here. That's fine, but until you have that initial rule set, I think you're not quite prepared to be in the markets. And I would say everybody should have a written set of rules that they follow, and then they can always come back and change them and update them as they change, they adapt and evolve as a trader or investor, or even the market evolves as well. There's always something more to learn. But until you have that trading rule set, I think you really have to make sure that that's a priority for you.
Sure.
Yeah. And lesson number 4, which I touched on before, manage risk tightly and use stop losses. When it comes to the biggest theme and the biggest mistake that all the traders who I've interviewed mention is that they let one trade or a few trades, or they were trading during a period where they were not managing their losses. They weren't using stop losses. They weren't adequately managing risk. They were sizing too large. They basically weren't keeping risk in check. And this is kind of the number one thing that we can control in the market, is how much we're going to lose on any given trade. And you want to set it up in a way where, as I mentioned before, we're entering at a spot in the chart, in the stocks movement, where if we're wrong very small with a small percentage loss. But if we're right, that potential reward is definitely worth a multiple of that initial risk. So if you can enter at a spot where there's a 2-to-1 potential reward to risk ratio, or 3-to-1 or higher, that's ideal. And that's going to set you up for success, because what that allows you to do is you don't have to be right all the time. You don't have to be right 90%, 70%, 60% of the time. Instead, the kind of edge is in that risk reward relationship, where your gains pay for multiple small losses and then some. And that's how you can really make progress. And that's really, really important.